welcome. You're watching Business Lunch. I'm Nisha Podar, and with me, as always, is Sonia Shenoy. Sonia, good afternoon. On Friday, looks like market has lost some steam. At the moment, 11,860 odd levels for Nifty 50, 0.43% down. In fact, all the key indices, Sensex, Nifty, Bank Nifty, as well as even the broader market, the mid-cap index, are pretty much in the same range, about 0.4% down in trades. But the bigger cut definitely is coming in from the financials. But the two of them, the two counters which are really bucking the trend, are going on a contra move, supporting the Nifty 50, are Yes Bank as well as ICICI Bank. But big boy Reliance Industries is also shaving off a lot from the key indices. Market breadth negative.
Absolutely. I think that's the most important internal, right? The fact that the market breadth is negative, and the fact that there's definitely a lot of caution in the system. So right now, almost 1,400 stocks on the declining side. That's a 1:2 market breadth. And the Bank Nifty is inching towards a 134-point cut. Now, this market has absolutely no patience for any stocks that even smell of bad news. Case in point, IndusInd Bank. Just look at the intraday chart. Although the management came, they clarified that there is no increase in the percentage of the stress book. Despite that, really, it is one stock that continues to be under pressure, so down about 3% odd. But in fact, on that note, let's get you IndusInd Bank's Ramesh Sopti, who told us quite categorically that stress in the NBFC sector will not become a systemic issue. He is also confident of maintaining the credit costs within the guidance range of 60 basis points. Take a look.
It is quite clear that there has been a liquidity gap which has been created by the fact that the flow of liquidity from the mutual funds to the NBFC sector has reduced. But, contrary to a lot of speculation, we have not seen a systemic sort of a issue playing out at all. By end of the year, provision coverage ratio goes back to the 60% that we always had.
All right, as we count down to the big event of budget on 5th of July, the who's who of India Inc. is with my colleague Parikshit Luthra in the Confederation of Indian Industry panel to talk about their budget expectations. Let's cut across.
What are the economic challenges for Narendra Modi in his second term? Remember, we are staring at a slowdown. The GDP for the last quarter was at 5.8%, which is the lowest in 5 years. We're looking at low consumption. We're looking at a slowdown in the auto sector. Even the rural sector is stressed currently. What does the industry want? What does the agriculture sector want? Joining us is a panel of experts. We have Mr. Adi Godrej, Chairman, Godrej Group, joining us. We have Mr. Sumant Sinha, Chairman and MD, Renew Power. We also have Rajiv Memani, Chairman and Regional Managing Partner, EY India. And I'd like to begin with setting the priorities for the Indian economy and ways to put the Indian economy on track. Gentlemen, we'd like to begin with each one of you by asking, what do you think should be the priority for the government right now? We're preparing the budget, but what do you think the economy needs currently? Mr. Godrej, starting with you.
Well, I think growth should be restored quickly. Unfortunately, the growth slowed down, and together with that, we had the elections. So everybody was in a wait and hold mood. Now that the elections are over, the results have come, there's a large mandate for this government, and this budget should be able to bring in provisions that create for fast growth.
All right.
One of the things I think that will be badly required is reduction in the rates of taxes, especially corporate tax. Corporate tax in India has become very high. It's about the highest in the world. And while they've reduced the corporate tax for smaller companies, they have not done anything as promised for larger companies.
All right. Mr. Sinha, what do you think the priority should be for the government right now?
Well, I would echo what Adi just said. I think restoring and reviving growth, I think, is the most important issue at this point in time. Clearly, we've had, we had 8.1% GDP growth in the first quarter of last year and 5.8% in the fourth quarter. And so there's clearly a downtrend happening on the growth front, and we have to make sure that we stabilize it and then sort of, take it back up. The question is how to do that. And there, of course, there are differences of opinion. My personal view is, in addition to what Adi said about reduction in tax rates, I think we have to do something about the financial sector at this point in time. To me, that's in fact the common underlying theme between consumption as well as investment. And with the kind of interest rates that we have in the country, which are real rates of about 7 or 8%, to me that's just very high. And that is really what is suppressing both consumption demand and investment demand. In addition to that, because of all the issues that we have in the sector on account of the ILFS situation, the DHFL, Reliance and so on, the general sense, there is a very lack of liquidity in the system right now. And that is constraining lending as well. So not only do we have high interest rates, but we also don't have sufficient liquidity in the system.
Right.
And that is really making it very hard for people to borrow and make investments.
All right. So we'll go into each of these issues: low consumption, the NBFC crisis, high interest rates. But Rajiv Emani, just to get the priorities from you, what do you think should be the roadmap for the government currently for this year?
See, I mean, Adi and Sumant have laid it out. I think it's very clear is to get the economy back on track, or at least getting the growth engine going. And that can only happen with probably greater infusion of liquidity, and more than the liquidity, the transmission of that liquidity into corporate India or into into the hands of retail or agri, wherever it is. I think the bigger challenge seems to be the translation of that liquidity. Overall, from what I understand, now the liquidity is almost at the same place, but it's lying in the bank accounts, it's lying in. So how does that get transmitted so that there is greater economic activity, and or not that everything that is sucked up is either lying there or it's being taken up by the government. Okay. So I think that is the key to get the growth going. I think there will be, in my view, from a budget standpoint, given where the economy is, and if you look at the tax revenue collections that happened, so basis the revised estimates that were given, and from what I understand the final estimates are, I think there's a big gap of almost 1,50,000 crores between direct tax and indirect tax. So if you have that kind of situation, and if the government has to meet the growth trajectory, or if they have to look at a 15-16% growth over the budgeted estimates of last time, you're looking at almost a tax buoyancy of 2.7-2.8%. So that makes the elbow room with government to deal a lot with too many tax issues will be a challenge. So my guess is that they will probably be my estimate is that they will probably look at a fewer areas and then try and see how they'll revive it. But a lot of it lies around policy and instruments outside of where the fiscal impact is, but much more on the policy.
Okay, let's start with the issue of falling consumption. Mr. Godrej, many economists have said that this should be the priority right now because this is hurting the economy. What can be done to boost demand, not just in urban areas, but rural areas as well?
Well, one of the problems the economy is facing is the real interest rates in which it's operating are quite high. Because although the Reserve Bank has reduced repo rates, they have not been transmitted by the banks. The banks are unfortunately taking the costs of their bad debts into account when passing on the interest rates. And that shouldn't be done, to my mind. They should find some other solutions for that.
All right.
So I think either the government should intervene or their capital should be raised so that they can write it off from their capital or something. I'm not an expert.
Okay.
But I think it's very important that the interest rates on which the Indian economy operate is not too high, because then growth will be very difficult to come by.
All right. Rajiv Emani, some quick steps, some doable steps that the government can go ahead with to boost consumption?
No, it's largely around interest rates. I think GST rates largely have been now probably, there are some categories where hopefully, it'll come down from 28% to 18% and some from 18 to 12%. But outside of that is just provision of liquidity, of economic activity happening, jobs getting created. That's the only way consumption gets created. The only other thing I would add to what Adi has said is partly why the interest rates are high is because the interest rates on various government instruments, on pensions that have been promised, on provident funds that have been promised, are very high. So when you're crowding out the market with all the government securities where you're paying, so when banks have to raise money for their CASA, they cannot reduce the rates below a certain level because you have government borrowing at such a high rate. So I would say, yeah, that, I mean, from a consumption standpoint, I would say, yes, those will be the things that they have to look at.
Mr. Sinha, if you talk about the banking sector, there is an NPA crisis. The government, and this is what Piyush Goyal had said in the interim budget, that the government has infused 2.6 lakh crore of capital into public sector banks between 2014 and 2019. What should be the way ahead, and what would be your expectation from this budget?
Well, clearly, while that is a huge number, I guess the problem was much bigger than that, and still is bigger than that. And that is partly, as Adi said, the fact is that banks are not are sort of factoring in their cost of bad debts into the loans that they're making. In fact, they're not making a lot of loans as a result of also risk aversion at their end. So I think one thing that we haven't spoken about is the fact that we need to do something to revive the economy. The question is, what is the best way of doing that? My personal view is that even though the fiscal deficit is at 3.4%, and there is a lot of pressure on the fiscal deficit, as Rajiv just mentioned, my personal feeling is that we need to do something to break out of the logjam that we're in right now, because otherwise there's nothing apparent that allows us to revive into a slightly faster growth rate. My feeling is that they'll probably have to do something along the lines of some sort of a fiscal stimulus. The question is, what is the best way of targeting that fiscal stimulus? Perhaps the way to do it is to put money into the hands of consumers by reducing tax rates for individual customers or taxpayers, and letting that become a boost to drive consumption demand. Or they could look at doing some sort of a massive recapitalization of banks and thereby infusing more liquidity into the system through that mechanism. So that could be another way of doing it. And I'm sure there are many other ways in which experts can think about what is the best way of doing this kind of thing. Right. But I think some sort of a game changer like that, I think is required in the short term to really give a boost to demand and thereby also to investments.
All right. Mr. Kotesh, do you also feel that while we look at urban areas, we look at the NPA crisis, it's also very important to look at the rural economy because when there is consumption in the rural economy, the whole economy gets affected. We're also seeing a slowdown in commercial vehicle sales at the moment. A lot of it is because of the NBFC crisis, because of the liquidity crunch. What would be your recommendation for the rural sector, and how important do you think this is from the budget point of view?
I think each sector should be viewed distinctly and solutions found. So you mentioned autos, you mentioned the rural sector. Now, rural sector, they have a very good objective to double rural incomes in 5 years' time from when they announced it.
Yeah.
And in my view, the best way to do it is to push animal husbandry, not just agriculture, but milk, poultry, eggs, fisheries. If they push animal husbandry, then I think the incomes in rural India would grow. That would not only help the agricultural situation, but it would increase consumption of a lot of consumer items. And
because things like PM Kisan Nidhi, that can only be a stopgap arrangement.
Yeah. So I think what is important is that animal husbandry should be treated from a taxation point of view like agriculture. For example, agriculture income is not, there is no income tax on agricultural income, but on animal husbandry there is. So why this distinction between two areas of the rural economy?
Yeah. Sumant Sinha, the CIA has also been talking about solar power as a source of income in rural areas. What can be done on that front?
So, well, the government has come out of the Kusum scheme, which is about to be implemented. And as part of that, farmers will be allowed to set up, by virtue of third-party vendors, solar installations in their farms, and then be allowed to sell that power to the distribution company.
Okay, that's a pretty long wish list that India Inc. has from the budget, but we'll keep getting you more of that through the course of the day. For now, let's take a quick break and be back with lots.